What's up? I'm Dan Fredenberg, and this is another chance encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Mickayla. Is it Fatovic, or how do you pronounce your last name?
Fatovic, but you can
Fatovic.
butcher it however you want.
Okay, great. Yeah, lucky me. All right. But the good news, Mickayla, is today my very favorite audience member is joining us. And why is my favorite audience member here? Well, it's because this is a chance encounter where I interview commercial real estate syndicators, investors, buyers, and sellers, and all that kind of stuff. Now, why would I do such a silly thing? Well, it's because if you want access to private deals, also known as 506B syndications, you need to have a documented per substantive relationship. And so that's why I have people on this show and I go through core competency, appetite for risk, and all that kind of stuff. And I do it in a way to make sure that you can learn to effectively communicate on the subject of commercial real estate deals. But before we get right into the weeds with that, Mickayla, do you want to say a thing or two about yourself before we get into your business?
Yeah, my name is Mickayla Fatovic. I'm the broker owner of Elite Pass Property Management and Real Estate Company. I love Mustangs, and yeah, that's kind of it.
All right, excellent. That works. So then the next thing we got to do is to go through the five distinct motivations. Wow, that was some interesting little flashy stuff here. Oh, it's because we got two different cameras going at the same time. But the first thing I need to do before that is I got to say, but wait, check your eight. And Mickayla, I know you're driving, so it's a little bit dangerous, but usually I have my guests look deep into the camera, and at the 8 o'clock mark over there, if you can see the user's device, you might be able to see this awful red subscribe button in their device that they should probably get rid of. It adds just a stupid joke I always do. But anyway, the five distinct motivations. I've met a whole whack of investors and syndicators and whatnot, and everybody has their own unique why. Maybe it's a particular person or something like that. But at the end of the day, I've found that they really fit into these five different categories. And the reason why I need to know my guest's motivation is because commercial acquisitions, they take months and there's lots of things that can go wrong. So I need to make sure that they're not just going to quit on us. So I go through all five of them. The first motivation why some people make a commercial acquisition is because they are preserving their purchasing power. What's that all about? Well, if you already have a portfolio of assets and the way that you make ends meet is from the proceeds of ownership, then the only reason you're going to make another acquisition is if inflation is wearing away at the purchasing power of your cash flow, or if you can buy at a steep discount, like during an asset crash or something like that. That is not my main motivation. My one is trading time directly for wealth instead of salary or wage. Now, I got a background in tech, specifically it's the CRM, so the mass emailing, but it's the
Oh,
e-commerce
nice.
side. So it's all sorts of receiving online payments for courses, tickets for events, courses, ebooks, anything like that. And the problem I had, though, is I realized that I'm paying more in tax than anybody else. So how can I pivot and do what my bosses in these real estate companies were doing so that I'm getting rewarded in the form of deployed capital, aka equity? So that's why I'm doing this, but that's not everybody. A lot of people, especially when they're young, they are interested in getting into commercial real estate because they want to take over their schedule. Maybe it means they want to fast track their retirement. Maybe it just means they want to work fewer months per year in a few years, or fewer weeks per month or something like that. But they're really looking to scale back long term. Whereas the next group, they're not looking to scale back ever. They are super duper ambitious. They want to buy their entire hometown. They are after that generational wealth to make sure that their great grandchildren never have to hold a day job. And that's why they're making their acquisitions. But the last group, they're also going to be hustling into their 90s like the ambitious ones, but their motivations are a bit different because they've picked a sector of society, or maybe it's the environment or animals or something like that. But they figured out that if you want to make a really big impact, you need to have a substantial financial backing, and that's why they're making these acquisitions. So, Mickayla, of those five different motivations, which one stood out? What combination would you say describes you best?
I would have to say the second from the last one that you just referenced, and that's just because like I actually came from like being a foster kid. I've gone through homelessness, so like my motivation is centered around the exact opposite of what I came from, to also not just benefit myself and my family and the generations of my family tree that come after, but also to help other people that are like coming from my scenario when I was a kid.
I love it. It's so important, and I think that I think most people don't understand how bad things can actually be, and
Yeah.
how it is not a level playing field at all, not even close. But the fact is, commercial real estate, it's I like to make the joke that real estate is the world's second oldest profession, and it's very, very competitive. So I need to make sure that my guest has some sort of understanding of the risks involved. And if you've ever done a 506B syndication, there's a questionnaire that the securities attorney is going to have you fill out. And one of the questions, it has to do with risk, but I don't think it does a very good job of really understanding if the person gets the idea of an illiquid asset and the other things that are problems in commercial real estate. So to get that, I get my guest to answer this fill in the blank question. There are many popular investment asset classes, but I think blank is too risky. Mickayla, what's too risky for you? We're both giggling.
So I'm trying not to like go
Right.
back. Well, I mean, our prior conversation, it's like, like we had mentioned, the Pokemon is there. But personally, like, I love collecting Pokemon. Don't get me wrong, but I would have to say, like, in real estate, oh my goodness, I would have to say, like, the most riskiest one that I personally encountered has to be the gross commercial leases
Mhm.
for like the office spaces, right? So those types of leases where the owner is taking on majority of the responsibilities. Or even, and like this is going to be like so funny for me to say this, but I honestly feel like long-term rentals are very risky. I think that they're very, very risky, and they're not really backed by a lot of support. And if a tenant just stops paying, they stop paying, and now you're in eviction for a good anywhere between 30 to 120 plus days, depending on like the county that you're in.
Mhm,
But
mhm.
those are my two, other than the Pokemon.
Right, right. So when you were saying that though, were you thinking more of the single family, or are you also thinking multifamily?
Everything,
Anything that's long
everything.
term? Okay, cool. Far
Yeah.
out. So the next part is that thing is going to tell you to it.
That is the coolest thing I ever seen, and I need one.
Yeah, it kills me every time too. It's a nice break from the commercial real estate stuff, but that's why we're here. And in every episode of Chance Encounter, I pull out the Dan Does Deals core competency cube. And what's that all about? It's got the 6 different core roles in a commercial deal. And if you want your own copy, it's completely free. You can go to dandoesdeals.com. And like a complete dummy, I don't even ask for your email address. And from a marketing perspective, you should always ask for some sort of contact information in return for your freebie. But I want to make sure that there is nothing stopping you from going to the site, printing out your copy, and practicing explaining these different sides of the die, because that's going to make a bigger difference in your commercial real estate career than anything else. If you can't talk about it, you're not getting anywhere. But in every episode, I go through all 6 sides. It only takes a couple minutes, and then that way you will know how my guest fits into these deals. So to start off, let's talk about repositioners. A repositioner is a person who looks at many different properties and does a bunch of paperwork. What are they doing with this paperwork, you may ask? Well, there's a fancy word for it. It's called underwriting. That means they're doing the math. They're figuring out the arithmetic. They're finding out, is this seller or broker even telling the truth about how much this property is generating in revenue and income? Because they might be playing some games like writing down 14 months instead of 12 for the year. So that's a pretty nasty one. But I call them repositioners because there's another important part of their job, which is they're figuring out how can they change how the property is run to find more upside. And one of the best ways to find upside baked in is by having financier relations, and then that way you can get more advantageous lending. So a financier is a person who only deals with paper and money. They do not get involved in the asset management or anything like that. And so every repositioner is going to have some financier investor relations. So that's what they're looking to do, is get cheaper loans, because that'll go straight to the bottom line. But the next place the repositioner is going to look is the operations. They're going to stop those Benjamins from going down the toilet. But of course, there's more to operations than just, unclogging toilets and collecting rents and mowing lawns and all that kind of fun stuff. Me personally, one of the things I bring to the table because of my marketing background is, even if we are doing, my ideal property size, which is like around 100 units or more, in that situation, you're probably outsourcing your operations to a third party. But if you're having a vacancy rate problem, marketing is going to be the difference when you can step in and get those vacancies filled. But because commercial real estate is so competitive, the operations, fixing things up, cutting expenses is probably not going to be enough. So oftentimes they'll get a contractor team involved to do a value add. Okay, they're going to do renovations on the units so that the next resident will be happy to pay more in rent than the previous one. That's the entire idea. But of course, you can waste all of your money on contractors and not ROI. And so you're going to need somebody to make sure that they're not cutting corners, make sure they finish on time, make sure they're not using subgraded, subpar materials and things like that. And if you're like me, see, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because that 100% will not be me. In an hour or two, I'd still be stuck at an airport. So that's not going to be my piece of the puzzle. But once you've assembled this team and you found a property, you turn around to the banks and financiers and say, hey, we found this property. Let's say it's 350 units and it's tens of millions of dollars. You don't happen to have, say, I don't know, tens of millions of dollars you want to lend us, do you? Now, of course, the financier, would have even more questions than you've probably got right now. But the biggest one, I think, is who is your sponsor KP? So if you are taking a coaching or a guru course or something like that on commercial real estate, this is the one that I find they really gloss over. And it's not so good, because let's say a scenario here. Let's say you're an engineer or a physician or something like that. You've got some fairly well-off friends, and you decide to pool your resources to take over a commercial property. Well, the thing that you might not know is you're not going to be eligible for a commercial loan unless somebody in the fold already owns a similar asset. So that's where the sponsor KP comes in. But on top of that, you're also going to need a certain amount of liquidity. And then among the owners, you need a balance sheet of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So, Mickayla, as far as where you fit in, I believe you're on the repositioning and deal finding side, but I don't want to put words in your mouth. Out of those, what would you say you're most likely to contribute to your next deals?
So definitely the repositioner, but also the boots on the ground, because we take care of like the management also. So it's like when you have those contractors, like let's just say, for example, we help you acquire it, we help you kind of run the numbers on it from like a brokerage standpoint, investment standpoint. After that, if it's a value add deal, like you said, you have to get the contractors. We have a big list of referrals, which is great. But then in addition to that, like we will literally go in there and just be your boots on the ground. If there's an issue, we're there. Like I've dropped everything that I was doing before for my clients and like ran out to properties in the middle of the night just to make sure that like whatever issue was there was resolved, and or it was in the progress stages of being resolved, with timely reports being given to like the investors and my clients and everybody involved. So definitely with those two, 100%.
All right, beautiful. So then the next question has to do with buy box. And when syndicators, investors, commercial real estate people are asking, what are you looking for? What's your ideal property? What's your buy box? We're really asking about three main things. The first one's geography. Which states? which counties, possibly even which neighborhood. Okay, that's going to be very pivotal before somebody's going to call it ideal. The second one's going to be size. Now, in general, the people who come onto this show, they're multifamily people, and the way that you define size in multifamily is by unit count. And the reason why that's so important is because you're going to have different groups of people taking over 15 unit apartment complexes compared to the 150, 350, and so on complexes. So that size is definitely going to matter. Other forms of commercial, like industrial, they'll go off of square footage, but unit count is a handy way to do the size. But the third one is called class. And a lot of people use the same word for two different things. I like to separate them out. The first meaning of class is condition. So that means how old is the building? Is it beat up or is it in reasonable shape? Is it like a brand new build? And then as far as like luxuries and amenities go, is it kind of like no frills or is it full of them and all like a really, really desirable, nice place? So that's condition. Now the other one is called area. And what they're really talking about is what's the crime rate like where the property is located? What are the school districts like where the property is located? How much traffic goes by? And both of those two meanings of class, area, and condition, they're graded the same way as in grade school, where you got the A plus at the top and then A minus and B plus and so on. So Mickayla, as far as your next deal goes, what's right in the sweet spot?
So as far as like geography, I personally like it when it's in my neighborhood. So like Brevard County or surrounding areas within like a 2.5 hour drive. As far as like unit counts, I would say anything between like 2 to 150 units. Like we're not picky. It's just like the numbers would have to make sense and the financials and kind of the benefits surrounding a typical deal analyst. So I would have to say location in the sense, or even like property condition in the sense, I like to hang out around the C minus to the B plus. And that's just because I'm really big into like value add. So when it comes to the condition, there has to be components to the property that we can add value back into it. So we can raise the equity and we can refinance, take out all of that money and move it into another one. So anything that needs work done to it, whether that's a heavy job, a medium job, or even just some like light touches, some paint around the corners and buffering, we're really open. Again, if the numbers work out and short-term rentals are allowed, your goal wants it.
Right. Yeah. No, it's absolutely. It's different strokes, right? But we're all different. And one of the next things that I always ask is about who is disproportionately well suited to connect with you. And that's the thing, is because you have these different roles, everybody in commercial real estate is really eager to help you build new teams. But at the same time, because of your unique skill set, you're going to be better suited to help some more than others. Me personally, because of the marketing and automation, the sponsors and KPs are the people who I'm usually looking for, but locals are the other ones because, of course, I'm from the internet. Mickayla, as far as you go, I don't know if you have any 506B deals going on right now, but you're not supposed to entice investors. I don't know if you have any like French fries or donuts in the car, but don't wave them in front of the camera because that's very enticing.
Okay.
But as far, it's okay to say beginners as well, but like who's out there who's perfect to reach out?
So anyone and everyone that is looking to break into like the creative, hybrid, STR, multi-family world, and even for like residential too. Like I love residential. I think people really overlook it. Again, it's just going to come down to like the price per unit and the numbers. So, I mean, if anybody is looking to get into like multifamily investments or short-term rental investments, then that would be our ideal customers. Location, it doesn't matter. I have clients that are in India right now, and we do management, we do the acquisitions, we do anything and everything. So anyone from beginner to expert, we are good for.
Awesome. And then as far as ways to reach out, I got this distinct last name. It's like you got quite the name on yourself as
I'm
well.
not even going to try yours.
Right. So, but it at least is super easy to find, especially on LinkedIn, which is the social media platform that I spend most of my time on. But if you're watching this and you scan this QR code right here, that goes to the FAQs page of 506BME, which is the platform I offer to document all of your investor relations so that when you get audited by the SEC, if you get enough assets under management, they always audit you anyway. And it's important to have these prior substantive relationships documented to prove that you actually knew what was going on with them. But that's what the I offer right there. Mickayla, if people are going to reach out to you, is it a social media platform or email or phone, website? How should people reach out?
Yeah, I mean, I'm everywhere, and I'll leave my contact information in the description. But my phone number is 201-952-4665. You can call me, text me anytime during normal business hours. I don't like midnight texts. It's weird. But
Mm-hmm.
yeah, so definitely check out my website, YouTube, Facebook, LinkedIn. I have it all, even TikTok.
Right. And it doesn't matter if it's 2 in the morning, just no heavy breathing or anything, right?
Yeah, just don't be weird about it.
Excellent. So the last thing I have, it's actually not for you, Mickayla, it's for you in the audience. It's a public service announcement that I always do, which is if you've been watching this episode and you've been experiencing searing pains in your eyeballs and like migraine-like symptoms, I'm confident it's that hideous red subscribe button that's just down there, and you can get rid of it just by clicking on it, and it turns gray. You should see the gray one. The gray one's really nice. And the reason why I want you to click on it, just full disclosure, is because if enough people do, then YouTube will actually start paying for these videos instead of me. And that sounds absolutely amazing. But as far as you're concerned, all it means is that my videos might show up on your list of suggestions. And it's totally cool if you completely ignore those suggestions, because I just appreciate the fact that you spent this time with me. Just like Mickayla, I appreciate you joining me today. It's been great getting to know you.
Yeah. Yeah, no, it was really nice to meet you, and thank you so much for having me on. My phone's on 1%, so I'm going to let you go, but thank you again so much. I appreciate you.
Awesome. Thanks. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.